Welcome to Investors Insights. Our topic today is Bullish October ? Historically, October is a very volatile month for the markets, and we've seen some bullish indicators throughout this month, and in 4 days it's over as we go into Halloween and make another step towards another month in the fourth quarter. So there's a lot of information here. Bobby, you were talking about we got big decisions with the Fed, right?
Yeah, part of the bullishness you're talking about in October is because of the Fed, and we expect this week the Fed to make a third consecutive cut. Obviously, we expect the cut to be more of an insurance cut because the Fed is seeing three things right now. One, deceleration in domestic demand. They're seeing a weaker wage pressures, and then also declining inflation expectations. So the Fed's looking at this, saying, okay, there's no question that this is suggesting economic weakness globally, and so we expect them to make the cut this week. But very important, look to see what they say about going forward. The market will react more to that than they would the actual cut to see what they're talking about going forward. Again, there's been some dissenting on some Fed members lately, and so it'll be very interesting to see if they continue to cut this year or they push it back to middle of next year.
Yeah, so, but let me say this, corporate earnings have been strong.
Very strong.
Corporate earnings have been strong. You're looking at an interest rate cut. That's a great combination. Yeah. So, and then Trey elaborated on
I mean, the market's kind of pricing in right now a 50 basis point cut. The 3-month T-bill sitting at 1.63%, so that would take it down to about 1%. So the Fed, after that, doesn't really have much room to move. But I think the market is definitely focusing on what the Fed's going to do for this month. You said, good October. It'll all be decided this week. It all comes down to this. We've had a great couple of weeks here. If the Fed disappoints or says something unexpected, we could give all the gains back. In addition to that, year-over-year manufacturers down around 5.5%. There's a lot of worry about China trade war, the European markets, and the global economy are slowing down. But the U.S. unemployment is a minuscule 3.5%. The retail sales report shows a rise in 4% in retail sales. And the U.S. GDP, in spite of a global trade war and a Fed that's cutting rates because of weakening in wages, is still expected to grow 1.3%. So where would we be without this trade war? You have to ask.
Absolutely.
The Fed it's a defensive. I think it needs to cut because we are showing weakness because of the trade war. But if we didn't have this, off to the races. Everything else seems to be doing great.
Showing a lot of strength, and that's the question. Normally in October, very volatile, a lot of uncertainty. We're getting a lot of positive indicators. And where does that take us into November and December? That's still the question. But then also on the manufacturing side and the consumer, actually, you brought up some great points in the debate with Trey and the rest of us this morning.
Absolutely. Trey mentioned manufacturing is down 5.4% in the popular press. It'll seem Chicken Little like the sky's ending, but the truth of the matter is manufacturing now is only 11% of our economy and 8.5% of the wage growth. So it's not anything like it used to be. And if you go back, the guys and I were talking this morning, if you go back to the end of the financial crisis, since 2008-9, the U.S. economy has grown 20%. 17% of that growth has been in service. Only 3% has been in manufacturing. It's just not what it used to be. Yeah. As an indicator.
Yeah, so tying back to what Trey said, if we didn't have the China trade wars, and
everything off to the races, really.
Very much so.
Right.
And then from an international standpoint, we're seeing a lot of positive things and a lot of politics being played as well, Adam, and you brought that up in regards to Brexit. Talk about that.
Yeah, between the Fed and China, one thing that hadn't been on the radar is Brexit. It's made itself back on the radar now. The UK earlier this month had asked for an extension of leaving the European Union. Well, 27 ambassadors met in Brussels and decided, yes, we will grant that extension. So not only are they going to grant that a month or two, but all the way out until January 31st, 2020. So now we're looking at, from a trading standpoint, Prime Minister and our administration, how will that work itself out? Heading into 2020, we might see a different kind of element than we would have seen if this closed before 2020.
So with all this information coming together like this, it's hard to believe, but in less than 90 days, we finish 2019, which we're very focused on is in terms of year end, but also going into 2020, we could see additional momentum take place here.
Yeah.
So on that note, we hope you have a great week. Your takeaway today is that we want you to have a happy Halloween and trick or treat. We just want to make sure that the market treats you and doesn't trick you. And we're watching that every day to make sure that doesn't happen. So we will keep you updated. At this point in time though, Bullish October. We like what we're seeing. Have a great week.